Sorry.
Oh, so sorry. Hey guys, this is Elena Garrett, your favorite real estate agent from Dallas-Fort Worth area of Texas. And today with me, we have Mohammed Sharif. He is a mortgage lender. He's going to be talking about a pretty complex topic called reverse mortgage. Many people are very confused about reverse mortgages, and to make sure that we break down the subject into manageable pieces of information, today we're going to have a short presentation that goes over how reverse mortgage works, and I'll be asking Mohammed a few questions along the way. So Mohammed, go ahead and introduce yourself.
Thank you, Elena. Again, my name is Mohammed Sharif. I work with Nixon Mortgage. Today, we're going to cover this complex topics, reverse mortgage. So let's go ahead and get started. Now, in this presentation, we're going to cover, we're going to talk about three different types of mortgage, which we briefly will cover. The other two, the HECM is the one is widely used and most common. This is what we're going to cover most. And what is required to qualify for this mortgage, and maturity events, and payback of the loan. Any questions so far?
Would you explain what maturity events are?
Like when is due, like, when do you have to pay back, what events causes to make this loan pay back?
Gotcha. Okay, thank you.
You're welcome. Let's move on. What is reverse mortgage? A reverse mortgage is a mortgage that allows an elderly person to convert home equity into available funds through a periodic disbursement, line of credits, or cash advance. Reverse mortgage does not require the homeowner to make any payments. The entire loan balance up to a limit is due and payable when the homeowner dies, moves out permanently, or sells the property. Any questions so far?
Just to clarify one more time, there are no real circumstance when a homeowner is living in their house and suddenly they receive a notification that your loan is due in full in next 12 months or something. They don't need to worry about suddenly being notified that they need to pay it back unless they moved out, right?
Yes, that's right. But also the homeowners also required to make the few things they have to take care of: taxes, insurance, homeowners association fee, and also upkeep the property. If any of those fails, yeah, that might play a role to make the whole maturity event. Other than that, until the homeowners moves out or refinances the house or sells the property or they pass away, the entire loan balance will be due.
Okay, sounds good. Thanks.
You're welcome. Let's move to the next one. Types of reverse mortgage. Now, there are three different types. The type that most common is HECM, home equity conversion mortgage. It's widely used, and we're going to cover HECM in this presentation. There are two other types on the reverse mortgage. One is the next one is the jumbo or proprietary reverse mortgage, mostly used for a high balance or above the conforming loan limit. What it means that for HECM, there's a limit for the reverse mortgage. If it exceeds that amount, then it has to be the jumbo reverse mortgage. The last one is a single purpose reverse mortgage. It is very unpopular due to lenders' restriction how to use the proceeds. And it is usually offered by state or the nonprofit organization. And this is, some state doesn't offer this program. Some of the states doesn't offer this program. Any questions so far on this?
No, seems pretty clear. So we're going to talk about HECM, right?
Okay, let's move on to the next slide. Is how does it work? In a forward mortgage, the borrower takes a loan, and with the loan, they get a home. On the other hand, in a reverse mortgage, the borrower gets a lump sum amount of money in exchange for future value of their equity in the home. Instead of getting upfront payment, the borrower may choose to be paid over time in a series of payments. The money that is paid to the borrower eventually will be paid back to the lender when the subject property is sold off. in the meantime, borrower gets one cash flow based on the equity on the home. Any question so far here?
So hypothetically, so it is almost like getting a second social security check in their bank account every month, right?
Yes, and that happens like when the reverse mortgage. Okay, the way it works, if it is the whole house is, if the more equity you have is better, or more for the borrower, if the more older, if their age is like more older, or I'm trying to say like if they're a person that is 70 years old will get more benefit from it than 68, 62, or 63.
Okay, so there's some kind of a sliding scale for the payoff.
I'm sorry, say it again.
Some kind of a sliding scale, so it's not just like
Yes.
one size fits all.
Yes.
Okay.
Anything else? Okay.
Nope.
Let's move to the next one. Okay. Now in this slide, we're going to talk about what it takes to qualify. Now on HECM, borrowers must be 62 years or older. Now, if the couple must be married when the time of application. Now, the non-borrowing couple can be under 62, but the proceed goes based on the youngest person. That's what I'm trying to say.
Okay, so if let me interrupt you. So just say that my husband is 73 and I'm 61. How would that work?
Yeah, it's definitely, if you're married, fine.
Okay.
But the proceed that goes with it is, or the disbursement is based on the youngest borrowers, which would be your age, calculated by your
Okay.
age.
But we're still qualified, right? Just the proceeds
Yes,
will be calculated on my age.
Yes.
Okay,
As
gotcha.
long as you're married, yes, you qualify. Okay. And one of the requirements of the next requirement is that you have to live in the house. It cannot be like you get the reverse mortgage and move away somewhere else. And the home must be single family homes. You can get it 2 to 4 units. Owner must occupy 1 unit. FHA approved condominiums, eligible manufactured homes. Now,
let me ask you. So those are manufactured homes. What about mobile double wides, single wides?
Yes, those are all eligible. Yes.
Okay.
Okay. And the couple or a borrower has to attend a counseling session. It's usually anywhere from an hour to 2 hours. And then borrowers have to continue to pay taxes, insurance, homeowners association fee, and maintenance of the home. Past financial assessment are use of LISA, life expenses set aside, or I'm going to touch on that later. Any question on this slide?
No, not really. If I'm currently delinquent on taxes, can the taxes be paid off? So,
Yes.
or how would that work?
Exactly. Anything, even with the any lien on the house or anything, any government, those has to be paid. You can pay with the disbursement provided through this program. Yeah, but everything has to be paid. Yes.
Okay. But once we've caught up on my delinquent taxes, after that, I must continue to pay taxes annually, right?
That's right. Yes. You have to be on top of the taxes, insurance, homeowners association fee, and keep up the home.
Gotcha.
Okay. And funds or principal limit. Usually you have to have pretty much 50 to 60% home value equity on the home. Like I said, the age of the youngest borrower or eligible non-borrowing spouse. These are the factors that decides how much funds the borrower can get, and also the current interest rate and value of the home. For the FHA or the conforming limit for HECM, that's what I was talking about, is 970,800 at this time. Whichever is less, the value of the home or this amount. Now, if it goes over these, that's when the
Jumbo
other mortgage, the
jumbo loan.
Yeah, jumbo. I'm sorry, proprietary or jumbo loan comes to
Mhm.
play. The reverse mortgage.
So can you give me an example? So my husband is actually 73 right now. And our home is valued currently at about $300,000, and we still have $49,000 of our original mortgage on it. So how much would we be able to borrow?
That's totally all the figures I have to put in a calculator. This is not, I can't say anything on top of my head. This is based on it's good, like I said, it's going to go based on the younger borrowers
Okay.
age and the interest rate. All this comes to play.
Gotcha. But so hypothetically, I should be looking at 50 to 60% of home value, right?
Yes, yes, that's
Minus my original mortgage.
yes.
So if I owe 50K right now and my house is valued at 350, I would be potentially eligible for about a half of 250.
Well, if okay, if you're, an example, if you're like, if, let's say your house worth 100,000 and
Mhm.
you only owe 50,000
Mhm.
for the house right now.
Mhm.
So what we do, take that equity and first that 50% basically used, it gives you kind of like a line of credit, and that used to for the month that where you don't have to pay any monthly payment. And but if the whole house is paid in full, then other half you can use to take a either lump sum disbursement, or you can get a monthly payment over time. You can pick a time, or you could be for life of the loan.
Okay. Okay.
Does that answer your question, or did I?
We might need to do a second video to give examples because let's just say we do have currently a situation where we could use reverse mortgage, for example, for my husband, and we owe 50K on a house. And but let's just say very hypothetically we have taxes not paid for 2 years. Then I would, can I, because we still owe some on a loan, can I use a lump sum payment in any way to pay off the taxes, or are we going to refinance the house completely and that will pay off the taxes?
Reverse mortgage itself is a refinance kind of thing, because
Okay.
through the reverse mortgage, we will pay off whatever is owed on the property, and then we will go with the program like how it works for you, like you don't have
Gotcha.
to pay any mortgage, and the other part of how much we can give you in either lump sum or line of credit, where you can pull one as you need it and things
Okay.
like that.
Gotcha. Okay, so it is a refinance in the end.
Yeah,
right?
a reverse mortgage itself is a refinance.
Okay, sounds good.
Okay. And the disbursement, if you chose the fixed rate, there's no other option. All funds must be taken at closing. Now, for the adjustable rate, if you chose the adjustable rate, there are a few options that you can use. You can get a line of credit where you will, like, let's say you got 100,000 of line of credit. Every month you can pull as you need it. Now, over the life of the loan, that line of credit increases at a certain percentage. But then at a point, it stops though. The second is term or tenure. Now, term is you can pick, like, if you pick, okay, 10 years, I'm going to pull this much money for 10 years. You can take that 10 or 15 years, however. The tenure would be the one that lenders decide for the life of the loan, you get this much, and that's going to be, lender will pay you that much for the life of it. And then lump sum would be, at the closing, you get, just like the other one, you get the lump sum amount. That's it. And the combination, you can combine any of these options, however it works good for you. And you can combine all this. Any question on that?
No, that sounds pretty straightforward.
Okay. Now, the maturity event, this is very important to understand. The maturity event occurs if the borrower, first of all, they sells the home. If the common misunderstanding about reverse mortgage is that they don't own the home. The lender takes, no, that's not right. You still own the home. Now, the maturity events will occur if you decide to sell, and at any time you can decide to sell the home, and then the all you have to do that whatever you owe, you pay the lender, and rest of it is yours. And then the other one is the next one is reside. If you reside outside the home more than 12 months, the maturity event will occur. You can, there are certain situations like if you were in like a elderly people was in a somewhere else for 11 months, then they came back but stayed, then it's fine. But if you like 12 months consecutively, if they're outside the home, then maturity event occurs. Or if they passes away, definitely. Now, if there's a young another spouse, borrower involved, then they don't have to move out yet, or it doesn't, maturity event doesn't occur. The other owner can they can stay as long as they want, or they can, at that point, they can sell or refinance their house however they want. And next one is fails to maintain the property. If, like I mentioned earlier, you have to keep up the property, and if you fail to do that, and if it, in that case, the maturity event occurs also. The next one, we also covered that, stops paying taxes, insurance, or homeowner association fee. There are some exceptions for non-borrowing spouse who wishes to continue living in the home after the borrowing spouse passes away. Those are, like I briefly touched. Any question on that?
So passes away. I guess it might be under disbursement, but let's just say I passed away, and I'm the only person in a house. How will that be handled? Did the house just transfers to the lender, or do my kids get the loan, or how is it all settled?
Okay. If the borrower passes away, then the other borrowing spouse still can stay in the house. The lender does not have any say on that, as long as they maintain all those required elements like taxes, insurance, homeowners association fee, and the maintenance of the property. As long as the non-borrowing spouse maintain those, he can stay as long as he or she lives.
But no, the question is, let's just say that I'm the only person, I don't have a non-borrowing spouse, and I passed away. Did the lender just comes and take the keys with all of my possessions inside, or what happens then? Okay,
next on the I believe it's the next slide. I'll cover that.
Okay, sounds good. Thanks.
All right, let's move to the next one. Here's what you were asking, the IRS, what happens to it. Reverse mortgage is a non-recourse mortgage, which what that means that nobody owes anything. Like, it's only the house tied to it. Nothing outside the house happens. Like IRS or anybody gonna owe anything regarding this transaction. After the borrower passes away, the IRS have a few options. They can either keep the house using their own funds or refinancing it. So whatever is left after the calculation, all the lender will do all the calculation, and either they can pay that amount and own the house, or they can refinance the house. The IRS can. The next one is they can sell the house within 6 months. Now, in that case, if they cannot sell within 6 months, there could be 2 more extension of 3 months each. But within that 6 months, if it's not sold, the IRS have to prove that they put the bona fide effort to sell the property. Then they will get another 3 months extension. If it's still not sold, another 3 months extension. After that, no more extension. So they have to either decide if they can either, like there's another option, cash for keys. The lender will give them some cash and they can hand out the key, and everything is done.
So the bottom line is that, okay, I passed away and I have kids, right? And my kids are not going to receive a bill from a lender saying pay us this amount.
I'm sorry, say again, your kids what?
Will not get a bill from the lender saying you owe us this amount.
Absolutely not. No, there's not, like I said, non-recourse. There's nothing, nobody's gonna owe anything. Only thing is might happen, they will get something. and which is like if there's something, either you can sell the house, refinance the house, or take, get.
But
take
let's
some
just
cash
say
and-
they did let's just say they did sell the house. So very hypothetically, my reverse mortgage was $100,000, right?
Uh-huh.
And they sold the house for 180. What happens? Do you take 180 or do you take 100? How does it work?
Well, the way it works,
Mhm.
the all the payments because in forward mortgage, what you do, you pay mortgage payment and interest. So they take that amount and everything added to the balance, like your balance increases. So since you're not making any payments, those monthly payment, they're and interest they accrue. So they will, at the end of the term, when its maturity even happens, the lender will add up all those amounts. If that amount comes up to 90,000 and the house worth 180,000, then your heirs or your kids will get that 90,000 out of that property.
Okay, so at the end of the sale, assuming that the property value went up since the time that I acquired the mortgage, my children has a good potential of getting some amount of money from the sale of my home, correct?
Yes, yes. The equity that builds up, yes, it's yours. It's not lender doesn't want it. Yes, that's yours, and your children or anybody that can claim the house, it goes to them.
Because I was under impression that once I pass away, the house and all the built up equity in the house goes to the lender. No.
No, it's only just using that example. If it is house over time and the equity increases, we all know that. So if it is in 10 years down the road, if the house 100,000 worth house and now 150,000, now as a owner, you are entitled to that whole amount. Now with the amount that all interest and monthly payment that's supposed to happen and all that, if it comes up to 110,000, that balance 40,000 still goes to you or the heirs.
Okay.
So it's I mean, equity does not go to the lender, and lender does not own the house.
So the lender gets the original what do you call principal? Lender gets the accumulated interest that was established at the beginning of the loan.
Yes, only takes that the payment and accumulated interest and interest based on the payment and all that, and they add it over that time, and whatever the balance comes up to, that's what lender will take out. Everything else goes to the heirs of the borrower.
Okay, that makes sense.
Any more question on this slide?
No, not on this one. So let's just say that I left a will and my will is executed and they trying to sell the house, but for some reason they are the house is in poor shape, etc. They cannot have more money out of the house to do the repairs, right? They cannot get another loan to do the repairs on that house, can they?
Okay, if you're asking like after the maturity event is due, they're not going to come for making them to repair or anything like that. But if they want to, the heirs want us to resell it, and if they want to fix it, they have to come up with their own money or.
So they would need to find cash. Let's just say my house is now 90 years old, right? And we have a lot of issues that are, not that easy to resolve. They'll just have to sell the house as is. They cannot use the remaining balance on my loan to make the repairs, right?
If they want to sell it, yes, probably. Unless if they can work out something with the, lender. For example, if they can find a lender, they will refinance the house.
Okay, so they can still try to refinance the house at that time, right?
Yes, yes. You can refinance anytime throughout the life of the reverse mortgage, or even when the maturity even occurs. If it is then you can refinance it. If it has plenty of equity, then use that. If you can get some cash out, use that cash and fix it, and then you can resell it. Yeah.
Gotcha. Okay. So we can keep the house using your own funds or refinancing. This is where that would come in, right?
Yes. Yes. Sounds good so far?
Yes.
Okay. Oh, that was the end. That's all, you
But
know.
then
Yeah.
that was very interesting, very illuminating. I have heard so many conflicting versions of what the reverse mortgages do and how there was some kind of a situation where reverse mortgages were not very popular for some reason, right? At some point, do you know anything about that? Because I'm sure that people will have heard about some reverse mortgages going wrong.
You are very right, because when reverse mortgage back then, I think, I don't remember exact year, but it was not set in a good way, and
Mhm,
a lot of bad thing was happening to the elderly couple, but they restructured and came
mhm,
up with a really good one now.
mhm,
So yes, people used to think that, well, it's not the case, never the case that lenders takes your home. You don't own your home. No, you do own your home. The equity that builds on the home, from that point when you get reverse mortgage, still is yours.
mhm,
So, but the lender never wants your home. So yeah.
mhm. But what you're saying is that legislature has somehow improved it, because
Yes.
I think that people from different generations might have heard different stories about reverse mortgage loans, and
Yes.
that is what I'm kind of hearing from my relatives of my husband who are in their 80s and 90s, that they're constantly getting offered reverse mortgage loans, but they say, I just don't know about that situation. I've heard some bad things about it. So how can they get more information? Let's just say that they might need some help with paying off taxes. Maybe they have delinquency on taxes. Maybe they have medical bills that accumulated and they're now struggling, and they can get. Oh, another question I meant to ask you earlier: is there a debt to income ratio for qualifying for this? Because let's just say that they owe. Let's just say that one of the spouses was in a hospital for 6 months and now they have a large medical bill. Will that medical bill throw off their ability to do the do the reverse mortgage loan?
It's certain. Okay, on a reverse mortgage, the main thing is the way lenders want to see is after you have to have some sort of income, either it's social security benefit or something, so that they have to make sure that you can pay all your taxes, insurance, and homeowner association dues. And you can up a little bit still left to, pay for upkeep to your property and pay for other stuff, things like that. Now, as far as debt to income ratio, this whole thing, before it moves any further, the lender will calculate everything and see if you can, qualify for this. Now, if it there's might be a situation where it doesn't look like the borrower may not qualify, but you will know about it. And the other things that I wanted to mention that, sorry, going a little bit off subject,
Mhm,
that who is like a good candidate for a reverse mortgage.
mhm,
Mostly, if a couple or the borrower has a pretty good amount of equity in the home and they want to downsize their house because the house is too big, not hard to upkeep with that, and plus, or they want to move close to their relatives or grandkids and stuff like that. And those are the ideal situation for reverse mortgage. You can move, you know, using the reverse mortgage, you can actually buy another house and sell whatever you have and stay there, and then you don't have any monthly mortgage payment. But now coming back to your question, so,
mhm.
that yes, the I'm sorry.
Debt to income, debt to income.
Oh,
Imagine
debt
that I
to
had,
yeah,
yeah,
debt to income.
imagine that I had a big medical bill. Mhm.
Yeah, medical bill, like they will calculate all those debt to income ratio. Yes, it does. Bottom line, yes, it does comes to play, and they have to make sure that you're going to be able to take care of the rest after, you know, whatever the amount coming, all the income that you have, like Social Security or whatever you're getting from the reverse mortgage, is it going to cover everything?
Mhm.
So it does comes to play.
Okay, gotcha.
But I
But
think the medical bills are not a required one because normally in regular mortgage, medical bills are not like we can ignore those. but I
So-
have to check on that.
Okay,
to be honest.
sounds good. So question then, let's just say that I'm a part of a couple and my significant other, they have health problems. And we're thinking about potentially, eventually downsizing, but right now we're not in a position to start moving. He's not in a position to help me pack. But I do need help with medical bills, right? Medical bills are coming in. My social security is not enough to cover all of them. My kids cannot help me. So how can I then approach somebody to ask what my options are for reverse mortgage? Like, how would I go about it?
Okay, in that scenario, like if you have like a pretty good amount of equity in the house, like it's almost paid off, or you have 10 or 20% left,
Mhm.
that would be ideal situation to use reverse mortgage, because beside your other income, you can take a monthly payment out of the reverse mortgage, or you can get a disbursement, like a lump sum amount, which will help you to maybe pay off the medical bills, and whatever left you can use it for others purposes.
Okay.
Now, if I put a little bit in a like a an example, like if you're on a house that $500,000 worth, paid it clear, I mean, all paid free and clear, so you can use reverse mortgage and take the disbursement and pay off everything. I'm sorry, my example is going back to the other one. Never mind. Sorry, I moved from the one to another.
No worries. But anyhow, so in your opinion, there are options, even though I suddenly got this huge medical bill situation going on, there are options. So how would I start the conversation? Can the viewers contact you and
Yes, definitely.
give you some kind of hypothetical without necessarily having their credit pulled or anything like that?
Yeah, and definitely. I mean, my contact was at the beginning of the slide. Contact my phone number and the email address, and also like to find out doesn't take much. I need some basic few information. Then based on that, after we go through that, we can come up and tell you whether with your income and with your equity in the house, what we can do.
Okay.
So,
And
yes.
last question, you mentioned nothing about credit worthiness. So let's just say very hypothetically that my spouse credit is 550 and mine is currently probably around the same or maybe even lower. How would that play into the mortgage?
In reverse mortgage, credit score doesn't really matter. It matters
Okay.
all the other stuff. Yeah, we don't really look at the credit score.
Okay, so no matter how low my credit score, I can still contact you, right?
Mostly, but I think there's a bottom. If there is any, probably gonna be 500 below, something like that. But as far as I know, that credit score doesn't matter. As long as the other factors fall in play, you're good.
Okay, sounds good. Well, guys, in case you have further questions about this topic, number one, you can contact Mohammed directly, which I recommend because he is the first person to go to. His phone number is 469-768-9888. And secondly, if you have any questions, you can email him. His email was at the beginning of the slide. And also I'm going to take his phone number and his email. I'm going to put it in the chat below. And you can ask the questions in the chat and I'll ask Mohammed to answer any question that you enter, not the chat, but the comments to this video. So I'm going to wrap up. Thank you very much, Mohammed. I know it was a very difficult subject to present on and you did wonderfully. Thank you so much for your hard work. And I guess I'll talk to you soon.
Just a couple words. Thank you,
Yes.
Elena, first of all, giving me the opportunity to do this. And yes, I was kind of the first time I did a little bit, got hiccup here and there, but hopefully I explained it pretty good. If you and anybody watching this recording have any question about anything, call me or email me, and I will come back with your answer. Thank you. Thank you, Elena.
Thank you, Mohammed. Now hold on, don't get off yet. So okay. What we're going to do is I'm going to stop recording and then I'm going to cut off the front and the back.